Bharti Airtel slips more than 2% despite reporting a strong second quarter set as the street remains concerned over the leadership transition plan at the company.
On the other hand, we have IGL that climbs close to 4% following its second quarter numbers. The company reports a beat on volume even as margins miss estimates. Morgan Stanley also issues a bullish call on the stock.
Pharmaceutical company Cipla slides 3%. It's among the top Nifty losers today ahead of its results. The CNBC-TV18 poll sees the revenue for the company growing 5%.
Federal Bank rallies more than 6% on the back of a good showing in the past quarter as gross NPAs hit a 37-quarter low. Brokerages UBS and Citi also issue bullish calls on the stock. The management tells CNBC-TV18 that they will be able to maintain their NIMs at current levels going ahead.
Gillette too rallies nearly 9% on the back of a strong set of second quarter numbers led by distribution expansion, higher traction in the female grooming range and better demand for high-end products, double-digit revenue growth, higher EBITDA growth and the net profit growth.
Hello and welcome to Chartbusters. I'm Nigel. With me is Mangalam. The headline index is down 130 points, but around 20 minutes or so ago, we were down 170 points. In that context, we've pulled back close to around 30 points, 40 points from the low point of the day. The Nifty Bank, that's the one that's putting in a bit of a fight. It's holding at around the 51,500 odd mark, so that's pretty good news. And the breadth of the market, as we speak, pretty much even Stevens. Though the mid-cap index is down, you have equal number of stocks that are advancing as well as declining. It's going to be an interesting trading session, Mangalam.
Very interesting trading session, Nigel, because, you mentioned the low of the morning from where we've seen a 40-point rally. Yet today's low on the Nifty is 24,158. It's pretty much similar to yesterday's low of 24,139. So if we can hold on to our lows, then can we see a bit of an up move in, in the second half of trade? The festive season cheer is here, a lot of events. And at the same time, we do have the Nifty Bank, which is outperforming as well, and the financial services expiry. That plays out in the second half.
All right. Well, let's get straight then to the first management on the show, StoveKraft. The stock actually has seen a lot of selling from yesterday, post the numbers that did come in. And today as well, it's down close to around 7.5%. The numbers are pretty okay, but the depreciation actually has gone up, which seems to have weighed on the profitability. To understand what's the way ahead, we're joined by Mr. Rajinder Gandhi, the MD of the company. Hi, Mr. Gandhi. Good morning, and thanks a lot for joining in on the show. Well, earlier you were talking about double-digit revenue growth. Could you give us a number? What is the range of the revenue growth for the year? Point number one. And you'd also said gross margin should hold at around 38% with EBITDA margins at 11%. You've done that as of the halfway mark. Do you hold on to this guidance?
Good morning. As mentioned before, we continue to commit to hold the 38% gross margin and improve on our EBITDA, which we are currently at 11%.
Right. And what about the revenues? Because I remember the last time you said that you are expecting high teens growth in FY25 for the revenue. First half, you've done high single digit, 8%. With the festive season, second half typically stronger. Is high teens still on the card, or it comes down to double digit or maybe, low teens?
We are witnessing good demand in the festive season, and we hope that the current quarter also will continue at the level of the last quarter or better. We believe it can be better.
But high teens is still on. Mr. Gandhi, we want to understand that. Will you still revenue growth be in high teens? And I just want to quiz you, the festive season will play out in quarter 3 numbers, right? Or did some of it play at the end of quarter 2?
While it did have an impact in the quarter 2, but the real play down for the festive season is happening in the quarter 3. And on the revenue growth, we believe that we will be able to deliver high teens, better than the mid-teens.
All right, you will be able to deliver high teens, better than high teens in this year, led by the second half. Just wanted to understand one on your market share as well. Where does it stand right now? Because if we compare, over the last few years, your revenue market share has increased because the others have either stayed stagnant or players like Butterfly, Gandhimati, etc. have seen a reduction in their SKUs. So where does your revenue market share stand at right now? And what's your target here?
Every product category that we are in, we are getting towards leadership, and also definitely we are acquiring market share. It is because of the positioning that we are addressing and our Make in India, Make in StoveKraft objective, which is leading to better supply chain and also a better cost to the consumer. Obviously, we are continuing to give better products in terms of quality to our consumers. All this is leading to higher market share.
Okay, so you're saying that you're outgrowing the market, right?
Yes, definitely.
Okay, for the past quarter, the reason I think profitability has taken a bit of a knock is because your depreciation cost actually has come in much higher than what we have seen either on a year-on-year basis or on a quarter-to-quarter basis. Could you explain this to us, and will it stay at these elevated levels? I'll tell you what, because from a shared market perspective, a lot of people look at the net profit, and that hasn't grown only because of this. So tell us.
It's only a matter of the lease accounting. Some of our assets and our retail stores, it goes to the lease accounting. And in a way, it is a positive because in the short term, of course, you'll see higher charges towards the depreciation and interest cost because of the lease accounting. But in the long run, this pains better. For the short term, of course, it is painful. But as our PBT numbers grow, this will slowly become insignificant because at the moment, these numbers are relatively large compared to our PBT numbers.
What about margins? You said 11%. 11% is doable, but a large part of the margin expansion also came in from localized production. Now you are at 92% of your overall sales as local production. So what's the headroom for margin from here? Because, from 70% to 92% is where all the juice came in. From here on, what can your margins sustainably be, say, in the next 2 to 3 years?
As we are moving towards more and more of manufactured products, our margins will improve. So you have seen the transition happening and the improvement in margin, but it will improve from here.
Okay. How much will it improve? I mean, it's 11.7%. Right. Please go ahead.
Aspirationally, we would want to be a little more higher than the 11%. We've always been in the recent times telling that we will protect the 11%, but the business is designed for a little higher than this. So,
how much higher? We are trying to understand that. You said aspirationally you're going to do higher, so just 13, 14, 15.
The range can be between 11 to 14 as we go.
14. Okay, we'll hold you at that number, because that's what the street is tracking. I guess operating. Yes, sir. Go ahead.
It may not happen yesterday, but that is the journey that we are traveling.
No. Indeed, that's what, so in the past, there has been a disappointment on this front, but you're seeming confident, and you had told us the last time around, as operating leverage plays out, that's what gives you a spurt to margins, and it appears, at least as of now, you're growing faster than the industry. So I guess that's what you're playing on, 11 to 14%. If you could tell us also the export opportunity, how big can it be for a company like yours?
Yeah, it is growing faster. We have been developing based on the requirement of our customer. We have developed a range of products. We'll start seeing revenues coming from the fourth quarter. We are also building some few lines for new customers based on their the discussions that we had. So we believe the overall growth rate from exports in the next 4 to 8 quarters will be much larger than the company's growth rate.
How much does it account for right now? And with fourth quarter, how much did it start? Because you began to supply to Walmart. We just wanted to know if you're talking to some other clients, etc. as well. As a proportion of your sales, how much can exports be over the next 4 to 8 quarters?
We are currently at the 12%. We will move to 16, 17% in the next 8 quarters. Apart from Walmart, also we are talking to some large customers. At this point of time, it will not be correct to disclose, but very soon we'll come with this discussion.
All right. Thank you so much for joining in, Mr. Gandhi, reiterating your high teens revenue growth target for this year, 11% margin target. But aspirationally, you would want your margins to go up from 11 to 14%. And at the same time, looking at exports to increase from 12% to 16% as you're in talks with other players than Walmart as well. Wish you a very happy festive season. Currently, the stock, however, in line with the market at the low point of trade. Take a short break. Come back. On the other side, we'll get you more on the markets. But actually, just before we go into that short break, also hear out an idea of profit coming in from our colleagues at MoneyControl Pro, Bharat Jinani. Listen to the stock that he's been tracking closely. Come back, and then we get the management of Indegene. Suhas Prabhu, the CFO of the company, joins in.
Today's ideas will be Juniper Hotels Limited. Juniper Hotels is a unique partnership between two renowned names in the hospitality industry, Saraf Group and Hyatt Hotels Corporation. The company benefits from the hotel development expertise of the Saraf Group and hotel management expertise of Hyatt Corporation. The company currently has a portfolio of 7 hotels spread across key cities in India with a room count of 1,900 keys. The company has highlighted aggressive room addition plans and aims to add about 1,250 keys over the next few years. About 550 keys will be added via the organic growth, and about 700 trees will be added by inorganic growth. The company has witnessed a significant improvement in the balance sheet post the IPO in February 2024 and has witnessed a significant reduction in the debt. The company is also expected to generate healthy operating cash flow, and we expect the company to generate 500 crores of operating cash flows over the next 2 years. We expect improvement in the margins as well as the return ratios, given the favorable demand-supply dynamics of the hotel industry and expected increase in the occupancies. At the current market price, the stock is trading at an EV by beta of 16 times FY26 projections. The stock is now available below its IPO offer price in February 2024. The current stock levels are attractive, and hence we recommend investors to add the stock in. Thank you.
Welcome back. You're watching us here on Chartbusters. We have with us the management of Indegene reported a muted set of second quarter numbers where revenue growth remains soft and margins as well contracted, as a result of which the stock now down 6% as we speak. Suhas Prabhu, the CFO of the company, joins us to review the quarter gone by. Thanks a lot, Mr. Prabhu, for joining in. You know, when you came to the street with an IPO, your 3-year CAGR, at least in the enterprise business, was close to around 55%, the enterprise commercial solutions. This quarter and the last couple of quarters, they've been soft. FY24, your revenue growth was just around 12%. Now as well, you know, year-on-year revenue growth has just been around 8%. So wanted to understand what exactly is causing this softness in revenue, and what's the target for this year as far as top line and margins are concerned?
Thanks. Firstly, good morning, and thanks for having me on your channel once again. Coming to the current quarter performance and more specifically the enterprise business. Actually, the enterprise commercial and enterprise medical business at Indegene, which is about 85% of our overall revenue, has grown sequentially at 3.6% from quarter one to quarter two. While the overall revenue growth was 1.5%, the strong growth in the enterprise business has been partially offset by a bit of a decline in the other two segments, which is the consulting part of the other segment and the omnichannel activation. Given at the current scale, these two segments have a little higher proportion of project businesses, which some of which have come to a close, and the offtake of the new projects have not fully offset the conclusion of the projects that came to a close. But I would like to highlight again that the enterprise commercial and enterprise medical businesses, which together are 85%, continue to see a strong growth, 3.6% quarter on quarter. More specifically, enterprise medical was north of 4%, while enterprise commercial was 3% growth. We believe that this bodes well for the future. The proportion of revenues from the larger customers higher in these segments, and are also more recurring kind of businesses.
Good morning, Suhas. Happy Dhanteras to you as well as your entire team. You've given us some color on the business, but let's get two basic numbers out of the way. First half of the year, you've grown by 10%, right? Your margins as well have improved to around 18, close to around 19%. For the year, should we expect double-digit growth? If yes, could you quantify it? And what is the margin outlook? Do you see that number head to around 20%? Let's get these two numbers out of the way.
Yes. So while we are not giving any forecast and forward-looking guidance, the way things are panning out from a growth perspective as well, right? We believe that H2 should be stronger than H1 coming out of Q1. In the quarter one earnings, we had mentioned that a couple of our customers, we were seeing certain headwinds coming out of their internal issues, restructuring and the like. As we speak today, we believe the revenues from these two customers, which are part of our top 5, have stabilized. In the current quarter, actually, our top 5 customers have grown by 2.5% or thereabouts quarter on quarter. And
Okay.
second thing is that the new logos that we added have started yielding revenues. As you can see, our
Right.
number of active customers have grown from 63 to 68 over the last 2 quarters. The number of million-dollar customers have grown to 37 in this quarter. So overall, I would say we are seeing stabilizing and growing revenues with our top 5 customers, while we continue to add new customers as we grow into the future. And I would say this is assuring for us heading into H2.
All right, two-part question for that itself. One is that if you could give us a sense of how many customers did you add in the previous quarter? What are you likely to add over the next few quarters on a quarterly run rate? And in what buckets are you looking at adding these customers? 1 million, then there are 10 to 20 million plus thereafter as well. And secondly, your acquisition, Trilogy, that you acquired in 2024, obviously that is playing out as well. So how's the growth and scale up of that business along with the operational efficiency there?
Yes. So firstly, let me address the customer segment. As you rightly pointed out, we're looking at growing the million-dollar customers, which have been steadily growing, continuing that pace. Many of our active customers, the 68 customers that we have over the next few quarters, should become million-dollar plus customers for us. And this number of 37 going into the 40s and heading towards 50 over the next couple of years. While we do that, having more million-dollar customers, we see some of the million-dollar customers moving into the 10 million plus and so on. One of the key things that I would also like to highlight is our largest customer, which was $42 million in annual revenues in the last fiscal year, has continued to grow. And we believe in the coming 2-3 cycles, we should see this customer breaching the 50 million mark. And therefore, we continue to grow across the spectrum, adding more customers as well as growing our existing customers into the next range of revenues. The second question on Trilogy, while Trilogy has been integrated into our enterprise medical business, and the joint go-to-market has already started playing out, some of the benefits that you can see would reflect in the higher growth rate in our enterprise medical business. Having said that, the regulatory and clinical writing part of our enterprise medical business is where Trilogy has been integrated into. And today we have better credentials, better access for larger global deals, covering especially key markets in Europe, which is where Trilogy has a strong presence, complementing our existing presence in North America, combined with offshoring ability coming out of India, as well as nearshoring ability in multiple markets that we have already established.
Perfect. All right, Suhas, a little short on time, but we appreciate you joining in and detailing those numbers and the path ahead as well for the company. Thanks a lot for joining in.
Thanks again for having me.
Quick check on the markets, by the way. When we were getting that interview going, we have the markets that have actually moved to the low point of the day, and Tata Motors has come in for a sharp knock. So just pull up the intraday chart out there. The stock was down 2%. Now it's down close to around 5.5%. So a lot of selling has creeped into Tata Motors. IndusInd Bank, that's the other one. Now it's below that low that we saw post its earnings as well. So that has taken a very, very sharp knock. And BPCL is another stock that's taken a bit of a hit in the last few minutes. So that explains why we're at the low point of the day. But let's get into the short break. As we do that, a small programming note as we slip into that break. As we prepare to ring in the festivities this Diwali, tune into CNBC-TV18 at 2:30 p.m. today to hear out the biggest of the market voices, giving their tips on how you can make your portfolio prosper this Diwali.
Well, the sell-off intensifies the market. Now the mid-cap index is down 0.8%. When we started the show, we had 1,200 stocks declining. That number has climbed up to close to around 1,500, with the stocks advancing down to around 800 as well. So at the low point for a lot of these indices, we'll keep an eye out on where they progress as we move on towards the end of trade as well. But as we talk about that, here's a programming note. We wrap up on Chartbusters. CNBC-TV18 celebrates 25 years of excellence. We invite you to the most anticipated event of the year. It's the CNBC-TV18 Global Leadership Summit. Brings together visionary policymakers. We have the Finance Minister, Nirmala Sitharaman, the RBI Governor, Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for the next 25 years of growth for India and global leadership will be charted. You don't want to miss this.